Hello bro and welcome back to the new stock evaluation video. Today we are going to analyze Broadcom Incorporated with the stock ticker AVGO because this is one extremely famous stock ticker, bro. Everyone is buying it, everyone is owning it. So I was thinking, okay, let's take a look at it together and also decide then whether we should add it to our own portfolios or not, okay? Now, as always, we are going to analyze it using this little Canva presentation that I prepared right now here. So let's begin. First of all, why should you even listen to me? Because I seem like one random guy from the internet, right? So my name is Yasha and I help young men from middle class invest in the stock market and actually make some money doing that, okay? So if you are interested in that, bro, click the first link in the description and I will explain to you everything. Now let's begin with the actual analysis. This is going to be very simple, straightforward, beginner friendly. I don't want to waste your time whatsoever. So let's begin, okay? First of all, generally, you should care about the following 6 things when you are a beginner investor. You should care about chart, profit, debt, money on the bank account, value, and price. Now, what is Broadcom Incorporated? This is one semiconductor company that produces semiconductors, basically, just like Intel, AMD. You know what the drill, bro. You are gaming probably, so you know this. And it was founded in 1961, so it's quite old and extremely famous company. So far so good. Let's go with the actual analysis now, okay? We will first of all analyze the chart, and for the chart we have here a little instruction that tells us chart has to grow for all 10 years. Now what exactly does that mean? That means that I will first of all draw a little exponential growth line, kinda like this. And then we are going to compare the actual stock price, which is this orange line, with that black line, and they should preferably follow each other, okay? Because why is this important? We want to invest in companies that are growing exponentially. We want to invest in companies that are constantly growing, and how can we see if they are growing or not? Just by that, we draw an exponential line and then we compare it with the actual stock price, okay? And here you can see that the orange line, which is the stock price chart, actually perfectly follows that growth line. So this is very good to go, okay? Now we come to the profit, and for profit we have an instruction that tells us profit has to be in plus and it has to grow as well. Now what exactly does that mean? Same story as with the chart. We are going to draw a little exponential growth line, kind of like this. And now when we are going to compare the profit with that growth line, okay? And immediately, bro, you can see that it generally follows that line. But the only problem is that they have, in 2016, they have minus. Now, for me, whenever I see minus on the profit chart, that's immediately a no-go. I don't want to invest in companies that have minus, because we want to have companies that are in plus, you know, that are growing, that the profits are growing, that the companies are growing. So whenever you see minus for the last 10 years, this is immediately a no-go, bro, at least for me, okay? So profit is a no-go. Now we come to the debt, and instruction tells us that debt has to be low, plus preferably it should decrease through the years, okay? Now what do we see here? Here we see exactly the opposite, okay? Here we see that the debt is actually growing, but since the last 4 years, maybe 4 or 5 years, it's slowly decreasing, but still, bro, that's not enough. The debt is growing, which is what we don't want to see again, okay? So debt, no. Now we come to the money, and with the money, I literally mean how much money do they have on their bank account. That means that whenever they go to their local bank, I don't know, for example, here in Europe, if they go to Credit Suisse, BNP, or some local bank, whatever, or if you are from America, if they go to Wells Fargo, Bank of America, Chase, and so on, they can literally withdraw that money from the ATM machine just like you, okay? This is the money that we are talking about. And preferably, that money should be in plus, because that means that they have more money than the costs, okay? Now, do they have more money than the costs? Bro, you are smart, use your brain. Take a look at here. They have plus $18.5 billion in plus on their bank account. So that's absolutely massive. This is, I think, the highest amount that we have seen so far, bro, when we were analyzing the companies. So this is an amazing thing to see. they are fucking loaded with the money, okay? That's an amazing thing to see. Now we come to the value, and obviously we want to invest in stocks that are undervalued. Now, how do we measure valuation? We measure it by two concepts. First concept is so-called P/E ratio, and the second one is called intrinsic value, okay? Now, as a rule of thumb, bro, especially when you are a beginner, you should follow this. P/E ratio should be lower than 15, and intrinsic value should be higher than the current stock price. Now, those might be some complicated concepts. That's why I wrote you here that instruction. Just follow that and you will be fine, okay? Now, you can find P/E ratio and intrinsic value data on the internet. Just write in Google Broadcom P/E ratio or Broadcom intrinsic value and you find it there for sure, okay? Now, let's take a look at the actual numbers. So, P/E ratio of Broadcom is almost 75, which is significantly higher than 15. This is like 5 times higher than 15, which is what we don't want to see, because that means that according to our evaluation, according to our comfortable zones, bro, this stock is 5 times more overvalued than it should have been. You know what I mean? So that's a no-go. Now we come to the intrinsic value, and this is quite important concept, and I want to have your full attention when I explain it to you, okay? So intrinsic value actually means the price that the stock should have at this exact moment, okay? Let's take a look at that example and I will explain it to you based on that, okay? So look here. Intrinsic value of Broadcom Incorporated should be around $1,000, okay? Now the current price, the actual price is 1,700, which means that the stock is currently trading at $700 higher than it should have. You know what I mean? So basically, intrinsic value tells you the price that the stock should have based on some calculations, but the current price is just the current price, literally as that, okay? So bro, that means that in terms of the intrinsic value, the current stock is for 700 euros overvalued than it should be, okay? So 700 more than it should be. So in terms of that, bro, this is also a no-go. So this company, bro, Broadcom Incorporated, is way too overvalued. And now we come to the price, and the little instruction tells us that price has to be lower than 150 euros or dollars or British pounds or whatever, okay? Basically just recalculate based in your currency, and it should have not be more than 150, okay? So I'm from Europe, I use euros. You are most likely from America, so you use dollars. So for you, bro, $150 is the border between the overpriced and underpriced stock, okay? Now, 150 is kind of the perfect ratio, you know, perfect border, so to say, because we don't want to invest in stocks that are overvalued, because, I mean, that are overpriced. Sorry, bro, that are overpriced, because we don't want to spend money. We want to make money, but we don't want to spend the money. You know what I mean? So this is the case here as well, okay? So the current stock price is around $1,700, which is way above 150. So in terms of the price, the company is overpriced as fuck. And now we come to the final evaluation, bro, where we are just going to summarize everything that we have found out so far about Broadcom Incorporated. Now let's begin with the chart. Does the chart grow exponentially? Yes, it does. If you don't believe me, go a few minutes back and watch the whole video again, okay? In terms of the profit, bro, do they have growing profit? No, I mean, generally they have, but in 2016 they had a loss. So for me, that's immediately a no-go. You want to be ruthless to the companies when you evaluate them, okay? So no. Does the debt decrease through the years? No, it doesn't. Do they have money on the bank account? Yes, they do. They have around $18 billion currently on their bank account, so that's absolutely rich. Is the stock overvalued or undervalued? It is overvalued by 5, you know, in terms of the P/E, and also it's 700 euros overvalued as it should have been. So no, it's overvalued. And is the price below 150 euros or dollars for you? No, it's not. It's 1,700, which is well above 150, so no. Now, should you buy or sell? In my personal opinion, bro, I wouldn't buy this stock because it's too expensive, it's overvalued, and then also they have minus in 2016, they had a loss instead of a profit. So no, for me personally, I wouldn't touch it, even though it's extremely popular, even though the financials are absolutely outstanding. I think I wouldn't touch this stock because I don't want to spend money. And if you take a look at the graph here, it's currently at the all-time highest. So I don't think that I would like to invest right now when it's so high, bro. So for me, they have perfect financials. Literally everything is growing, the company is growing, they have a lot of dividends, you know, it's perfect, but overpriced and way too expensive. And don't forget the loss. We want to be ruthless because that will keep our judgment in place, you know. Now, if you want to know more about stock market investing, I encourage you to click the first link in the description where I will teach you everything about it. I also encourage you to click subscribe if you want to know more about other stocks. Do the hard work, bro. Join me on this amazing journey to get rich with stock market. Do the hard work again and see you on top of the world.